Nick Schultz with Community Development Bank.
This is John Jost from Midwest One Bank.
Corey Sheminsky with Financial Security Bank.
Nick Schultz with Community Development Bank. I'm the President and CEO. All right, well, thank you everyone for coming to our first episode of Shop Talks. We started out with the bankers because everybody figured you can't get a banker to shut up, so we'll get the bankers talking at first. So, my name is Nick. I work at Community Development Bank, and I'm going to do a kind of I would say a brief overview on the state of banking as it is right now and kind of over the past year. Banking as an industry is kind of there's a dirty little secret in banking is that we take the money that you deposit and then we give it to somebody else. We just can't give all of it away. You know, normally it would be about 80% of it is really effective, and so that's been a little bit of a chore to figure out how to do that through COVID, how to do that through times when businesses might not be doing as well as they had in the past, and so we wanted to kind of talk through some of the parameters that we look at and some of the things that might have affected that over the year. So there was this thing last year called COVID-19. You guys probably all heard about it, and that was impactful for everybody's business. I know, Jackie, for you guys, you got forced to shut down a couple of times. For us as bankers, we had to figure out how to do our jobs differently because our lobbies closed. We kind of knew what we were dealing with. It was a very strange time, as you guys all know. I'm sure, Jeff, you had to meet with clients virtually, and especially we want to be careful what we say, but clients of a certain age, helping them through how to do a Zoom call. I had to do a couple of those to help them balance checkbooks and things like that, the things that they would normally come into the lobby for. I'm the young ones. The young ones, Sandy, they don't know how to manage the checkbook. Yeah. So banking is considered critical infrastructure by the Department of Homeland Security. There's an offshoot of that, the Cybersecurity and Infrastructure Security Agency. I've never met any of them, but they told me I had to stay open. There was no choice. We had to figure out a way to service our customers, whether their lobbies were closed or not. So we actually are required to maintain what's called a business continuity plan. So, for instance, if the bank gets hit by a tornado, then we have a plan to get a temporary trailer there, force operations to a different location so that those folks are processing our deposits and things of that nature for the electronic deposits. And then we have basically a trailer with Wi-Fi set up so we can take in cash and dispense cash, things like that in the parking lot. What we didn't necessarily plan on, like most businesses, was a pandemic. I know in our business continuity plan, it addressed pandemics. Pretty much every business took a PPP loan because it was April 2020 and nobody knew what the heck was going to happen. People were dying. You turn on the news and everybody's dying, and you just didn't know what was going to happen with your business, and so everybody took the money. And in the cases of most businesses, especially the ones that were forced to shut down, the ones that were forced to shut down had tough years. But the ones that didn't get forced to shut down, most had okay years. Plus, then they were able to pay their staff out of their normal operation. Plus, then they had this PPP loan sitting over there too, which is included in the blue line in some cases. So yeah, that's it was an interesting time, and I think in your institutions too, PPP just about killed us. They were trying to force, I forget what the total number was, $300 trillion or something, through the eye of a needle that was made to handle $29 billion a year. They were trying to force 10 times that amount through in a month. And so what was happening is it was super antiquated. No offense to the government folks but let's face it. Right, so this is kind of a key measure for a lot of banks, is the loan to deposit ratio. And what's probably considered an effective ratio is in between like 70 and 80%. You can take in deposits and loan out 70 to 80% of it. You're probably doing a pretty good job making money, because a lot of times the deposits are going to be in a non-interest-bearing checking account, and then you're going to charge somebody in good times 5% for that money, and so then that 5% is what you get to pay your bills, and then In the last, I would say 15 years, the number of independent community banks in America has fallen drastically because of increased regulation since 2008. There's, John and Corey can tell you, just, I don't think there's a month that we go through that somebody's not in the bank either auditing us or examining us, or somebody's asking for records for an upcoming audit. You know, it just, there's so much compliance that we have to deal with. And a lot of it is very well-meaning, trying to make sure that banks are doing the right thing to make loans to folks that can repay them. Also, you know, banks are not operating in an unsafe and sound way, so you as a depositor are at risk if the bank were to fail by making bad loans. So it's all very well-meaning regulation, but for a bank my size and Corey's size, John works for a little larger bank, but you know, frankly, unfortunately we have to jump over the same bar that John's bank does, and so we have to work just as hard as they do to comply with it. And so there's one of the reasons why you know, you see a consolidation in those community banks is because the larger your footprint, the more you can spread that cost over that footprint. And kind of, I think probably right now, I would argue you have to be about $500,000 in size to really be effective at dealing with that. You know, my bank right now is about $250 million. I'm not sure what size you guys are. 102. So yeah, you got an even bigger hill to climb than we do. So that's the reason why you see consolidation in the industry. It's just essentially that a lot of bankers, either because they're fed up with dealing with the regulations, sell their bank, or because they don't want to pay the expense.
Hello, this is John Jost from Midwest One Bank. I'm the branch manager and second vice president. I will be discussing today ways to protect your account against fraud. Here and we talk about something scary. If you know me, I'm from Anoka, and so the Holy Capital World. The first thing I want to talk about is Regulation E. So Regulation E is the consumer protection law that protects customers against unauthorized and fraudulent electronic transactions, such as credit card and debit cards transactions, but it does not apply to businesses. So the best thing that we can do is prevent that fraud from happening in the first place. And the average loss to a small business in a fraudulent scenario, the average last year was $80,000. Not many businesses would like to absorb an $80,000 loss for something fraudulent, and that was the average last year. So let's talk about some scary stuff. So some common fraud schemes impacting businesses. The first thing that I want to impart upon everybody is last year with the pandemic has caused most of the business type of frauds that we've seen over the last few years to explode. And that's because it's happening electronically. So my first thing to talk about is be extremely cautious when you're opening and responding to your emails. This is where it's all starting. Business email compromise. This is the most frequent type of fraud that we're seeing, and what takes the most of our time and expertise and repair for our customers is based on this business email compromise. And there's 5 ways it's been happening. The first kind is the leader kind, or executive. You get an email from somebody in your company who's an executive or the leader that says, hey, we got to send over $60,000 to ABC company. Here's the instructions. I'm tied up in businesses all day. I can't sign off on this, but I need you to take care of it. If we don't meet that 12 o'clock deadline, we're going to lose such and such. I need you to take care of this. That happens a lot. I mean, it's online banking for your business. And so online banking for your business, you can sign up for these real-time alerts. As things are happening, such as checks are coming through or there's large items, you'll get an actual text or an email that kind of alerts you, hey, right now this is coming through. They're not asking you to do anything about it, but they're just giving you alerts. So why would you want to do that? Well, because you can monitor your accounts, access and track transactions, assign individual users, and those users, it will keep track of who initiated these transactions. That's what's nice. You have somebody in Peggy's office, let's say Peggy, did you know that Suzanne initiated an ACH to such and such? It builds dual verification practices, and it makes it easier to review your monthly transactions. So, I should mention costs. Every bank's going to be different as far as what certain costs are with things. So I just want to give a demonstration of let's say at Midwest One. That first thing, online cash manager with real-time alerts, that just comes to your account, that's free. Positive Pay can cost up to $35 a month per account for ACH and $35 a month on the check side. There's also per item in those Positive Pays at 0.5 cents. Remote capture can be up to $40 per month. But I also say this with a caveat because your deposit balances can eat up and eliminate those fees altogether. So these are not hard charges, these are analysis charges.
I'm Corey Sheminsky with Financial Security Bank, Assistant Vice President over there in Albertville. My topic today is banking your business. How do loans work? That's kind of what our topic is today. I want a loan. Can I get one? What do I do? Where do I go? Okay, step one. I always love the little joke on the side. Money doesn't grow on trees. Why do banks have branches? Food for thought, right? So step one is the most important one out of everything, you guys. And it is just meet with a lender. It doesn't matter who it is, just meet with them. I can't stress enough that you don't have to have all of your stuff together. Sit down with the lender and let them help you. It's part of their function of our job is to be your partner in this. If you do not feel like the banker is your partner, you should be working with that banker. Other options are, there are referral systems out there that if you feel like you're intimidated by walking into a bank, which is totally a thing, unfortunately, it just kind of feels like bankers have a black eye against them just because of all the bad that happened so recently. 2008 was not that long ago. So there are programs out there like the SBA lender match system where you can fill out just a simple form, say a little bit about who you are, what you do, what you're looking for, and you'll have bankers call you. And you can decide who to talk with. Pretty fascinating system, and it's a good way to try to showcase that you feel like you're a good fit for them. But step two, discuss the plan for the short term and the long term. There's nothing worse than what's called a transactional relationship, meaning you don't want that banker to help you with one thing and then they move on. They went to another bank, they left the industry, they turn their phone off when you're calling, they send you a voicemail, never return the call, whatever it may be. You don't want that. So you want to discuss, what is it you're looking to do? You want to grow together. If you don't feel like your banker is your partner, again, why are you working with them? Borrowing money is a big deal. It really is when it comes to that point. Whether it be for your business, for your house, whatever it be, you want to make the right choice. Like Nick was saying earlier, I mean, if the interest rates went up just 2%, those houses you see getting built just they're not sustainable. You don't want to get yourself into a rough spot. So work with someone to help you guide through that. Okay? All right, working capital is money to get those things to keep everything moving, keep up with your cost of production, keep up with covering payroll, keep up with covering marketing so you can get those orders in. So the right banker is going to talk you through the process of just what do you feel like you need? You want to take this next leap of faith and grow your business. What all do you need to make sure you don't run out of money? But one of the top 3 reasons businesses fail is lack of financing. And if you borrow money from a bank and a month later say I need more, it might be harder to get that second round of financing because why? What went wrong? Okay? So working capital is always thinking outside the box. It is okay, and people are sometimes amazed by it. It is okay to borrow money to help cover the next 6 months of rent, to help cover the next 6 months of payroll, just to get through that, to make that next big leap of faith. Because once you do a new service, a new product, or just open your business, you're not going to get all of your customers to walk in day one and boom, you're at full capacity. And that would be a dream come true. But it just doesn't happen. So plan for the future. Work together. You'll hear me say that an awful lot. All right, step 3, the application. Don't be like the guy in the picture. Okay? So personal financial statement and a tax return. Nick and John can totally attest to this as well. These are the two most common things every single banker is going to ask you for. Personal financial statement will just serve as your application. We want to know the whole picture, so share it all with us. There's no reason to hide it. There's no reason to make up the numbers. We need to get down to where are we at? What is it that you have? What can we help with? What is it you're trying to grow? And tax returns, because we have to put together what's called the financial trend. Where are you going? We have to get a kick out of it when people will talk the talk but not walk the walk. Right? We've all heard that. My business is so busy, things are just incredible, I'm doing awesome, doing amazing. And then you see the actual numbers and they lost money. Or they Because as a banker, in its extreme simplicities, we want you to make as much money as you can. As a tax preparer, we want you to make ends meet and help with your tax obligations. We get it, they're different languages. They just are.
You just gotta let the banker win every other year.
Yeah, win every other year. I love it. Well said. So,
so what a lot of times, and we look at a customer on a global cash flow, and maybe you do the same, Corey, because a lot of times what folks will do is pass business profit back to themselves personally, and then it's taxed at a lower rate. But then on the banker's side, we can look at all the cash that's in the system as far as the business and the personal side, and then say, is there enough to go around to feed Anders and also keep the gym running, and so that's sometimes how we get around that.
Yeah, it's one of many ways. Have the right team is what that whole point is. Have the right team, which includes a banker. It is amazing how many times a banker can get left out of a conversation and you come to him too late. Yeah, we're always last in that. All right, small businesses and loans. I love the term small businesses because it really defines small. The SBA, in the realm of small, $25 million in revenue is small. Okay, is that the number? Yeah. Yeah, it is all over the place. So the point is I can't tell you how many times I've heard people walk in, want to borrow $25,000 and they say, I feel like I'm wasting your time. That is not what it's about. We're here to help, whatever it may be, which is pretty cool. So I would like to throw that out there. SBA, do we know what it stands for? Okay, it's our best friend in this last year and a half. They are who funneled the PPP, not by their choice. They were the ones that were led to lead it, and woofda, you guys. So what a world. But SBA financing outside of PPP, SBA is such an incredible tool, an unbelievable tool, because it allows us to do the more riskier loans while not having as much risk on our books. What in the world does that mean, Corey? Okay, the SBA formed. The idea started in 1932, actually formed in 1953, but the idea started with President Hoover after the Great Depression, was businesses need money. Banks are saying no because banks are failing all over the place because the Great Depression is ensuing at this point. So why don't we put a government program together that says, bank, if we take part of your risk, will you say yes to more loans? Seems like a win-win. We can help grow with customers, grow our customer base, give loans out like Nick was talking about to help cure that loan to deposit ratio. It's an awesome tool and it has flourished ever since. Been around for a very long time. Even the big businesses, and yes, big is a relative term, just like small, so that's why we use the quotes. It's fun to just kind of, what are some businesses that we think started with an SBA loan? So a 23-year-old college football player from Maryland kept going to football and, lovely sports, getting all sweaty and worn out. Came up with an idea, there's got to be a better way of clothing for this. And he started a small company that we all know of called Under Armour by taking a $250,000 loan. Now he does billions in revenue every year. SBA helped with it, which is pretty cool. I love this stat. In 2019, the SBA was doing $50 million worth of loans on a daily basis. Okay, that's a lot of money. Now, Yeah, and that has nothing to do with PPP. Obviously, that number is completely not within reason anymore because of the trillions of dollars that went out, basically, it felt like, but billions, of course. But, all right, now we get to tests. Misconceptions about the SBA. The reason I'm focusing so much on the SBA is for us, for our bank, doesn't mean every bank, but for us, this is our go-to product for small businesses. Because we love the program, we understand the program, and
You're protected.
we are more protected.
Yeah.
Correct.
More protected.
More protected. A lot of times people want to start their business, buy a business, whatever it be, and jump head first into the deep end, i.e. husband, wife, head of households, whatever, quit all of their jobs and go all in on their business. You know, when maybe the husband should leave his job and run while the wife works her job, or vice versa, and slowly work your way into that to keep some stable income coming into the household while you get it going. Every situation is totally different, but offsite income is like what Nick was talking about with the global cash flow. Is there money coming from other sources to help cover the mortgage payment, help cover the car payment, whatever it may be? How many times a week do you guys think I take a phone call, email, sit down with the person and go, I have bad credit, that means you can't give me a loan, right? And it's not the case. See the growth potential and work together to achieve. What I mean by this is one of my cousins, the fourth person I ever helped get a loan was just a $10,000 line of credit. Okay, one of the smaller loans I'd ever done. He operated his business out of his basement. And what was cool about it is the story is cool. The start of it wasn't cool, as he got laid off from his job because of the recession. Struggling to make ends meet, but we got it together. It was making sense. Did a $10,000 line of credit. 2 years later, we gave him a $200,000 loan to move into his own commercial space and get it set up for his business. And 2 years later, after that, he bought out his competitor. All in 4 years. I'm not saying that I'm the reason that happened, but I'm part of the reason that happened. Any lender is part of the reason that happened.